Welcome to Word on the Block, the series that takes a deeper dive into blockchain and all the emerging technologies that shape our world at the intersection of business, politics, and economy. It's what we cover right here on Forkast.News. I'm Forecast Editor-in-Chief Angie Lau and your host. Well, Bitcoin's return to 10,000, decentralized finance, and central bank-backed digital currencies. Well, the blockchain space and the industry sure made strides in the year 2020. And certainly that's the case for Diginex here, making a historic moment for blockchain. A crypto exchange on the Nasdaq, the first digital currency exchange to be publicly listed in the US, raising $50 million from private investors and then redeeming shares of its SPAC or reverse listing on October 1st, 2020. So we welcome back to the show right now, Diginex CEO Richard Byworth. Richard, it's great to see you again.
Great to see you too, Angie. How have you been?
It's been very good, but probably not as busy as you. I think the time we talked before was right ahead of your Nasdaq listing. So congratulations for that and becoming the first company with a crypto exchange to do so. So how has the reception been so far?
Yeah, look, thanks very much for that. It's been an amazing entry into public life. Certainly a baptism of fire as well, just sort of making sure that all the governance protocols are in place, having that sort of structure around the board and risk committees and all the various different ways that we have oversight that, you know, is the whole point of getting a company like ours listed on Nasdaq, is to really raise the governance standards on this industry and the level of transparency as well. So yeah, look, it's even for us, it's definitely been a transformative time.
Well, how are mainstream investors via Nasdaq viewing Diginex? I'm taking a look at just your history so far year to date. I mean, you're still pretty brand new, but off your 52-week high of $13 per share, what do you think is driving sentiment of the sell-off that we're seeing at the moment?
Look, I think Diginex is a name that is not particularly front of mind in the US at this point in time. We need to do a lot of work with investors to get the profile of the company out there. Obviously, the exchange is newly launched. I think last time we spoke, we'd pretty much just launched. Now we're regularly hitting $10 million of volume on the exchange, and we're looking at launching a whole load of new products over the next few weeks. So that will really start to drive volume and I think gain more and more notice across the industry. And then when people find out, obviously, we're publicly listed, I think that starts to change the tone. But more and more, you know, I've got people approaching me and saying, look, we've started to get involved a little bit with your stock. I think that, you know, what you guys are doing is very transformative for the industry, but it's great to have a way to play this in the public markets. The way we're referred to in the public markets is a picks and shovels trade. So it's a play on the sort of the ecosystem of the industry, everything that's going to advance and gain fees as we grow this industry and grow the underlying asset class.
So you mentioned that you'll be presenting or you know, providing some new products to the market. Can you clue us in?
Yeah, look, we've got our roadmap in the public domain with the SEC. So a lot of what's coming now is derivative product. We're starting with sort of the basic leverage style product of perpetual swaps. That'll be in Bitcoin and ETH predominantly. We're rolling out on-exchange credit. So there's a lot of stuff that's coming that will really start to focus the mind around Equos and what we're doing.
You know, it's interesting. It is that kind of bet that if you're not deep into the weeds, which is, you know, obviously what your crypto investors are doing on a day-to-day basis, and if you want to participate from the next level up, so to speak, that you could still participate without, you know, seeing the roller coaster rides that, you know, every time we see interest in trading in the markets, either good or bad, the exchanges always make out fine. So it's interesting that those are the bets. Yeah.
Exactly. It's the toll collection trade. It's like the trade to play or pay. Effectively, markets go up, markets go down. You know, these ecosystem trades, these platform trades are the ones that benefit. And, we were always of the opinion that the industry needed to take that step forward to be able to give a level of transparency and governance that will give people comfort in onboarding on an exchange. I mean, look, you've seen a number of issues with centralized exchanges over the last few weeks, even, all of which, by being a Nasdaq-listed, regulated, and place to effectively have governance around protocols around like key storage, these are the things that give sort of a better level of certainty and security to investors.
What do you think is lacking in the education amongst some of your more traditional investor types, the institutional types that are still a little wary or unfamiliar with the space?
You mentioned it earlier. I think, a lot of us in the industry sit and, we're in this sort of echo chamber all day long, and this is what we live and breathe. And you're obviously a big proponent of this for institutional investors as a technology as well. But I think that it takes time to really get your head around what the value attributes of an asset like Bitcoin are, or how assets could be moved with a blockchain transmission network. And I think these things are actually a little bit complicated. And I think the industry doesn't always help itself in terms of overcomplicating things with jargon and so on. And so I think that really, to your point, education needs to keep continuing. I spend a lot of time talking to investors about the positive attributes of this technology, but also the particular assets that sit on these networks. So I think education needs to continue. We need to be out there front and center, people like yourself, keep pushing the narrative and explain to people why this is so important. And as you say, during COVID, such an important moment for this as well, in terms of the overall adoption of digital.
I mean, you just take a look at the space that we're in, Richard, in Asia and Hong Kong and just the adjacent regions. And, the statistics couldn't be more clear. There is intergenerational wealth here that is growing. And if you take a look at the average portfolio of the Asian investor, 40% of people's portfolios exist in cash and alternative assets. If that doesn't tell you about the scope of the opportunity, which is clearly what we see, and this is the market that we are serving as well, there is a lot of money swishing and swashing around in this region. But I am curious, though, does being listed on the Nasdaq now allow you to draw in that kind of investor into Equus and Diginex?
Yeah, look, it's been very accretive already. We've seen a lot of investors and people that want to start to get involved in the space start to finally say, okay, this is a company that I feel more comfortable with, that I can finally start to onboard. I mean, to your point, when you're sitting there talking to a family office or whatever, an investment firm that is sitting on 40% cash, when you've just seen the US dollar money to supply increase by 20% over the last 8 months, what are you doing sitting on that cash? And I think that this is why we've started to see the trend of many public companies move their treasury actually with quite a sizable allocation towards Bitcoin, because you finally got a scarce digital asset. And that in itself is a huge, huge value driver.
It's a value driver, it's liquidity into the market, and it just grows those opportunities. Do you expect other companies to get publicly listed? We already know of a few in this space, but how important is that public listing?
I think the public listing, it comes with a number of effective assurances for the investor. We had to go through an approval with the SEC. The SEC combed through a 470-page document of every item of history of this company, everything that we're doing, and our forward-looking roadmap. And the SEC had to get comfortable with that. We had regular back and forth questions and assessment of what it was we were doing. And then we had the process with Nasdaq itself. I mean, Nasdaq is a regulator. As an exchange, they're a regulator. And again, same process. So once you've had those two of the most credible regulators in the world, look through your business and assess it, that's the point where you get that investor assurance. To your point, to your question around, do we expect to see more public companies move into private companies in this industry move to being public? Absolutely. I can tell you that since we actually finalized our SPAC, did the business combination, we've had 3 of the world's largest crypto companies approach us and ask how we did it, and what sort of process they would have to go through to getting those governance standards in place to become a listed company.
So it sounds like that's another business arm now for Diginex, is the advisory role.
The advisory side, put it under Diginex Capital again. Yeah.
Exactly. Well, I mean, you have mentioned that Equos will adhere to the CFTC regulated model. It's currently based in Singapore. How do you obviously, CFTC, SEC, Nasdaq, how do you think the listing is going to drive your roadmap potentially into US operations while maintaining your Asian base?
So just to be really clear, we are not in the process with CFTC in any way whatsoever at this point in time. We don't actually onboard any US clients to any part of our platform other than sort of servicing technology. So US is definitely a strategy for us down the road. We've just finalized the hire of a very key person in the United States to help us build out the strategy there. But that's going to be, a longer road. We want to finalize what we're doing with MAS. We want to make sure that, that we're helping MAS improve the licensing framework and structure before we start engaging with other global regulators, particularly around the exchange. Our custodian, DigiVault, actually is in the early process for FCA regulation for digital securities, and I think that's the way we're going to have to be going if we want to see the advancement of broader digital securities. So securities issued on blockchain networks, and I think we've talked about this many times around, the sort of the first stage of that is private equity, securitization, and sort of these opaque areas of paper security markets. So once we start to see that propagate more evenly and openly, then you're going to need regulated exchanges for securities. You're going to need regulated custodians for securities. And obviously those securities are digital.
Yeah, and that's a great point that you make about that. I mean, in relation to the growth of the derivatives market to allow your clients to use Bitcoin as a core collateral, how do you think that the paper-based securities will be translated into digital assets to be traded on your platform? And why hasn't this, been possible yet?
It's really about regulation. First of all, it's regulation. Then it's about client adoption. So if you think regulators need to be at the point of regulating these exchanges, these custodians, as I said, you need a marketplace. You need a place to have a third-party custodian for digital security specifically. We're getting very close to the point of global regulators getting comfortable with that and starting to sort of create regulatory frameworks around it. The harder part actually is getting Japanese pension funds or sovereign wealth funds to the point where they say, okay, we're comfortable booking a digital security in our systems. Because not only do they have to worry about custody and marketplace, they need to be able to understand what a blockchain is, what a protocol is, why one protocol is better than another, what a protocol standard is, how it actually gets booked and interacts with the rest of our ecosystem, and who are credible custodians that they can diversify across. So you've got a whole host of issues that they need to get through risk committee, investment committee, before they're actually going to start to allocate capital to that space. So it's regulation first, and then it's a lot of hard work with these investors. I think, again, you and I have discussed this before, but the way that we do it is actually from our investment banking business. We actually give investors paper securities and say, when you're ready, you can transfer that into a digital security and you can flip it back each way. So effectively for us, what we're doing is going around just planting seeds with these very large allocators of capital. At the point that they say, okay, finally, we want to get into this space, they go, oh, we traded that security with Diginex Capital. maybe we can start to experiment with that and move it over.
Look, it's great. I mean, as you've noted, these are huge barriers to entry for even just an interested investor or an interested client. And it's, and what you've described is akin to, opening up a bank account for my 3-year-old. He has no idea what a bank is, no idea what money is, but one day he will. And when such time comes, he's got one. And so, you got to start him young.
Yeah, you do. Does he know what Bitcoin is yet, Angie?
You know what? The funny thing is, mom got him one for his birthday. And so every birthday, I should have just done the reverse. I was going to do one for every birthday, but I should have just do 18 and then work my way down to one when he's 18. So those are the way that the prices are going. I have to say, this is interesting space, but look, the crypto industry can solve this, in those very innovative ways that you've described. But how else can they? I mean, right now there is an issue with liquidity. We're seeing that being experienced by DeFi, the Ethereum network. We're seeing a lot of liquidity in this space. Then we're seeing on the other end the actual cryptocurrency like Ethereum. The prices are also quite debilitating for some of those DeFi products. So how do we solve this issue of liquidity? Is that something that you're thinking about on the exchange?
I think in the particular case of DeFi, you're thinking about obviously the gas rates and the pricing of moving Ethereum around. And I think this is a problem that Ethereum has had. They had it in 2017 with the ICO bubble. They had it, with the recent run up in DeFi projects. I think there's, something like $11 billion of capital wound up in various different DeFi projects at this point in time. And so, yeah, I mean, look, Ethereum has talked about Ethereum version 2.0, where you're going to have scalability, you're going to have a lot of addressing of these issues around the Ethereum network. But more and more, we're seeing more interesting not more interesting, but interesting protocols come along that could potentially help solve some of these problems. I mean, you've recently had Polkadot issue their network. You got many others that are starting to appear. So there's a lot of really amazing minds focused on this particular problem, and it's not our business to be involved in that side of things. We position ourselves very much as protocol agnostic with what we do in the security issuance business. But look, we're very encouraged by the progress that the industry's made over the last 2 to 3 years in this space with protocols being released. I think if you're talking about liquidity around Bitcoin, obviously, Bitcoin liquidity for trading has grown quite significantly. We're regularly with sort of derivatives and spot. We're talking about $20 billion daily market of volume. So we're really starting to see, no doubt about it, institutional participation in this market. And I think, we talked about the treasury assets, MicroStrategy, when they bought 425 million Bitcoin, apparently Michael Saylor, the CEO, just sat there buying Bitcoin on an exchange over the period of 11 days. And he was just amazed that he didn't impact the price, buying nearly $500 million of Bitcoin. But, this is a liquid market. It is starting to become a meaningful asset. And I don't think that's changing.
It's certainly not changing. And back to, your listing, as you've mentioned, you went through a lot of regulatory hoops to get there. And the industry is better for it as more and more move towards making investors feel safe. I mean, I think that's the perspective of a lot of people. But what do you think about the recent arrest of John Mcafee and the ongoing BitMEX debacle? What was your reaction to these series of crackdowns?
Look, it's always the way that we'd thought about the industry. Even in 2017, I mean, we thought that we were going to see regulator clamp down a lot earlier than this. And that's actually why we started building Diginex. And we were panicking at the time. We were like, oh my God, we've got to build this as fast as possible because everybody's going to realize this is the way that the industry is going to move. but actually we saw very little in the way of moving in that direction. In fact, many of these exchanges that you mentioned continued to just attract huge amounts of volumes. And institutions, they'd speak to us. They say, look, we've really got no option other than to be transacting on these exchanges, even though we don't know if we're interacting with capital that hasn't been properly KYC'd or AML'd. And this was clearly a very, very big problem. So, now that we've launched Equos, we're starting to get that focus from these institutions that for so long were sort of stranded for liquidity elsewhere. So I think that it's a moment in time. It's the way that the industry had to grow. If you think about, the internet, it grew very much in the shadows in the same way. It was a sort of a dark space in the early days. And I think, this is just normal with an emerging technology, because you need to have those first movers to drive the growth, to prove to the people that are going to bring the regulatory and the sort of the higher standard that there's actually a business to be done here.
And, when you take a look at the globe right now, your footprint is pretty much everywhere, but you don't have a US business quite yet, even though you're listed on the Nasdaq. Yeah. A lot of the business and a lot of interest is here in Asia. Why would exchanges still prioritize the US market? Why can't the Asian market support the volume while liquidity is not as developed as we're seeing in the US?
I think liquidity is there in the US. I think that actually the way that I think about it is, if you say, obviously, China, you've got 1.2 billion people, you've got 700 million emerging middle class. So, while the wallet is interesting from a numbers perspective, it's from an actual cash perspective, it's much smaller than you would get from the 300 million population that you have in the United States. The other thing to mention is the business is focused on this industry. A large proportion of them, do sit in Asia, but actually a very large proportion of them also sit in the United States. So many of these guys want to be onboarding to our platform, but we can't actually onboard them yet because of US Nexus rules. And so we have to just, wait until such time that we can either partner with someone around a license or actually build out our own platform in the United States. But it is a limitation, and it's certainly something that we want to take seriously and address as the business develops.
Well, Richard, last time we talked, you told me that your goal in a year's time is that we would be sitting here at Word on the Block talking about 10 to 20x growth in the derivative market. Where are we on that?
I think we're about stable. Largely because it's taking time for these platforms like ourselves to roll out within regulatory frameworks. But Backed, CME, they're both doing record volumes at the moment in their institutional derivative products. We're seeing massive growth in the option market, massive growth in the futures market. And as I think last time, it was only 2 months ago that we were sat here, the majority of derivative flow was perpetual focused. So the perpetual product that we see on a lot of the crypto exchanges. Now, I think that that's an important product, but I think it's also very important that we get more and more of that option trade, because that was the point that I was talking about. When you have all the various strikes, all the various term structures, you're able to construct other derivative positions around that, things like variance swaps, vol swaps, VIX products, and then you get a whole slew of structured products, and that really feeds the market. And then you have that overall growth, and it becomes very cumulative very, very quickly. So yeah, I still stick with it, 10 times the size by this time next year.
Well, I think that, part of that growth story has got to be the foundation. And you've got to have a trusted foundation, as you noted those many years ago before you built this product and brought it to market. And it's about education, quite frankly, as people recognize what's going on in this world with the real perpetual liquidity being the central banks of the world, and wondering about the value of actual cash. That's I think also in the background as we watch you grow. So
Yeah.
It was great. It was great understanding where you are today, where we are on track, and the listing. Congratulations again.
Angie, thanks very much for having me. Really appreciate it.
Richard, absolutely. It was great to have you on the show. A big thanks to Richard Byworth, Diginex CEO, and a big thanks to you for joining us on this latest episode of Word on the Block. I'm Forkast.News Editor-in-Chief Angie Lau. Until the next time. If you like that, come back for more. All you have to do is click like, always comment, we love that, and subscribe. And don't forget to watch the next one.